Welcome to Crypto Disrupted. I'm your host, Trent Lipinski. I'm here with Juan from OpenFinance. And hey, Juan, how's it going? What are you working on?
Hey Trent, how are you? Yeah, thanks for having me. We're working on some pretty exciting things at OpenFinance. You can find our platform and more information in case you can't watch the full video at openfinance.io. So at a high level, the big thing we're working on is a security token trading platform. So a lot of the stuff that you hear about these days around STOs versus ICOs, STOs being security tokens and kind of being a bit more regulated version of the token that's out there today. That's the big thing that we're working on, basically creating a platform where these tokens can trade amongst themselves, similar to how someone would trade on a Huobi or a Binance exchange platform, but in a compliant fashion. So that's kind of at a high level what we're working on. We do a lot of other things around clearing and settlement, but that's all a bit more boring. The security token trading stuff is really the exciting piece that people are gravitating towards.
Nice. And you've been around working in this space for a while, so you've just now kind of pivoted into this blockchain, security token space. Can you talk a little bit about what you were working on before?
Yeah. So our team has been actively involved in the alternative asset space for some time, and alternative assets are basically things that are, things that are outside of public stocks and equities and bonds. Things that trade on Nasdaq or NYSE. And so the alternative asset space, pretty massive market, $7.7 trillion. Things like private equity, real estate, venture, hedge funds. And more recently, crowdfunding stuff. So it's crowdfunded assets that got really popular after 2012 with the Jobs Act. That's when our team came together and really started developing this trading platform for alternative assets so that retail investors could have an opportunity, once they've bought these things, to actually have a home to trade them, to find liquidity. And so that's the space that we've really been focused on since mid-2014. Obviously last year, big year in financial markets with the massive sort of upswing in blockchain technology and adoption of blockchain for capital raising, ICOs in 2017. That's when we started addressing the blockchain market and looking for areas where we could provide a lot of value to the new crypto investors who are starting to play in the more regulated security token space. And certainly in 2018, this year, STOs is kind of the big thing now. ICOs are 2017, STOs are 2018. We'll see what 2019 brings.
Yeah, and I've noticed that just even from my interviews recently on this podcast is, I'm seeing a lot more people talking about, we're doing an STO, we're doing a security token offering. Right. They're doing private sales. They're taking a very different approach to the whole ICO concept than what we were seeing in 2017. And they're pushing towards being self-regulated or appealing to regulations and creating solutions that, do provide that extra layer of trust to investors and people who want to participate.
Yeah, and that's the key thing, right? Trust and security. And, a lot of people conflate regulation with something really bad, like something really onerous. And at the end of the day, we look at regulation as really just being something there to protect people like, me and you, people like our parents or grandparents who want to be able to participate in these markets, but don't feel safe doing so right now because it's there's a lot of grayness right now still. And so for us, certainly the regulation helps to increase the appeal of tokens to a broader audience. And we think it's something that's just needed to really give clarity to a lot of people who might be concerned or worried about how one thing or another might play out in terms of compliance and regulations.
And as an asset class, ultimately tokenizing assets, it's not that big of a stretch compared to, how current systems have already been in place. You've already traditionally been using traditional markets to be able to buy and trade different securities and different assets. It's just now there's a digital way to do that with tokens using blockchain solutions that's just simply a little bit easier and a little more effective. So it's not like this is a whole new industry here. It's just we're taking an existing markets and existing industries and we're just wrapping blockchain technology around them with tokens to be able to make it easier to buy and trade and sell and possess them.
Yeah, and so we like to consider that sort of a phase one, right? Kind of just tokenizing existing assets, or instead of doing your venture fund on traditional, I guess paper or whatever, you do it on chain, and tons of applications there and a lot of value created in that process. But to us, what gets really exciting is once you've kind of done that phase one proof of concept, if you will, of can you manage books and records on chain? Can you do capital raises on chain? Can you do all this compliantly and efficiently? Then it starts to get, I think, really interesting in terms of what the next generation of funds might look like, right? In terms of, perhaps having funds that don't really necessarily have, like a hedge fund that doesn't have a hedge fund manager taking 2% off the top of it. You just have a smart contract that kind of stipulates how the proceeds are to be dispersed once they've been processed, and you can start to think through some of the possibilities that this new technology can really entail. So right now we're kind of going from an analog to a digital type conversion, but once we've established that that's a safe mechanism, then I think the really interesting fund structure is going to come to light that'll I think just kind of change the face of investing.
And can you kind of like touch a little bit more on smart contracts and how it's kind of a convergence of finance, computer science, and blockchain is kind of the solution that kind of brings this all together?
Yeah, at the end of the day, the big thing that these smart contracts do and the blockchain technology does is it really removes a lot of that element of trust and counterparty risk, because you can have it codified within the smart contract. So when you think of a typical clearing and settlement process in securities, you have a lot of parties along the way, the broker, the custodians, the banks, the clearing houses, etc. And each one of them has to be held honest to each other, but by a complicated system of checks and balances. And so a lot of that mechanism can actually be done via smart contracts. It's very much early days still, so a lot of it is still not so much unproven, it just hasn't been built up yet. The infrastructure is not quite there yet, and we see ourselves as a big infrastructure player, building that for the market. But once you have that infrastructure in place and you're not reliant so much on a counterparty to provide that level of trust, you have that trustlessness that can be found within the smart contract technology, and something you can obviously audit and see, and it's very transparent. So a lot of it is just, really providing an ecosystem where the different participants don't have to necessarily worry about that counterparty risk and that trust factor, and just kind of makes for a much more efficient and smoother market.
Well, and that's kind of where your trading platform also comes into play, because now you've got a platform for people to be able to go trade these securities on, and it kind of removes necessarily having to have that conversation. Now they can interact with the platform,
Right.
Purchase these security tokens and interact with them that way. And then you've got a number of partnerships lined up. So can you kind of talk about some of your partners and some of the tokens that are going to be on your trading platform?
Yeah, absolutely. So for us, a big part of our strategy is working with all of the other issuance providers in the space. So partners like Securitize, Harbor, TokenSoft, Polymath, other portals like Republic and Start Engine, other providers like Core Connects and SEC Registered Transfer Agent. Basically working with all the folks who work with the issuers today to help them tokenize their assets and bring them on chain. So by us partnering with these participants, then we can basically create an onboarding mechanism where their tokens can easily be traded on the platform. And so for that, there are technology components. We do have there's a technology integration to ensure that their tokens are compatible with our system. Really we look at that as bringing that level of interoperability across the board, so that there is a uniform standard where all these tokens can then be fungible with each other.
Yep. And your product's already out, so people can already use this. It's out. So what's kind of the next step? You've got all these partnerships, you've got all these security tokens, you've got all the, you've kind of got all this together. So what's the future looking like for you?
For us, the future is just continued integration with other participants on chain, basically. I mean, just every day there's a whole new wave of participants coming to market. We get really excited by some of our new partners. For example, we just today announced a strategic partnership with Morgan Creek Capital, Anthony Pompliano's firm. And a lot of their major thesis revolves around the tokenization of real-world assets and bringing them on-chain and unlocking the liquidity potential and value within that. And so partners like that are starting to, more and more of these types of participants are starting to come forward, and more institutional players are starting to come forward. And that's, again, where we think it hits that critical mass where as there's more and more trust put into the system, you're going to start to see more and more opportunities created for all network participants, which is to the benefit of people like you and me, and to the benefit of issuers who are trying to raise capital. Gives them a much more efficient method to do so.
Nice. And so, now that we're at this point with, security tokens and, people are, opting in to be regulated, we've seen this trend really start to kind of take off in 2018. Are you expecting more of the same in 2019?
Yeah, absolutely. I think 2017 was a big, it was a big catalyst in the markets, right? With ICOs and just the explosion that came from that. 2018, as we've discussed, is STOs. It's really kind of a convergence back towards a baseline of compliance, because 2017 was a bit of a party year. This year the regulators have kind of come forward with some guidance. Certainly more clarity is needed, but the guidance is, pretty evident. And as you've noted, most people are starting to move towards security tokens. But the guidance has been that, these are securities, plain and simple. And guess what? There's rules for that. And they're not just rules that are from, 30, 40, 50, 60 years ago. These rules were just recently updated in 2012. There's a major update to crowdfunding rules in 2012, and there's been smaller updates, the last year or so. But 2019, we see, once the industry kind of comes to that, acceptance of the baseline, then we're going to start to see a lot of innovation on top of that. And so I think, the buzzword of 2019 is going to be RegTech. As more and more people start working within blockchain technology to innovate within the regulatory framework, to really push the bounds, to figure out better solutions for issues like custodianship, issues like registrars for broker-dealer rules, certainly working within the confines of the framework, but really pushing the boundaries and pushing the envelope. And then you'll see, obviously, updates come to the regulatory framework over the coming year.
I mean, and that's a big challenge that I'm seeing from a number of the startups that I've been talking to, is like, who owns the private keys? How do you explain to your mom what a private key is, and that you can't lose it? There's got to be a number of innovations there to bring this to the masses.
And some of it is just something as simple as a very friendly user interface, right? It's UI, UX to a certain extent. I mean, certainly there's a lot of heavy lifting that still needs to be done on the core infrastructure, the technology side. Some of it's going to come down to just UI, UX, customer experience, right? I mean, when you think about, just basic web technology, right? TCP/IP technology, can you really expect people to do, command line web browsing, right? Like, nobody, only the most technical people would know how to do that. And that's what you see today with blockchain, right? You need to have a certain level of technical skills and knowledge in order to really interface properly and leverage the technology to its fullest potential. But once you kind of have, whatever the equivalent of a web browser will be, whatever dApp is going to come out, that'll be kind of that killer dApp that everyone can adopt and start to really get comfortable with the technology, then that's going to be that watershed moment that's going to have, it's going to bring mainstream adoption, where the people using it, they're going to have no idea how the underlying technology works, and that's fine. Most people can't explain to you how sockets work and how, what an SSL certificate is, but they still use that technology every day in their lives. And blockchain is still just in that infancy, where it's still, it's still just a bunch of, folks playing at their terminals, just messaging each other with various commands.
Yeah, and it's an infrastructure play. I actually interviewed someone recently, and they're working on a decentralized network, and they just got it working so that you can actually host traditional tech stacks. So, your traditional website. So they got their first, so the founder himself got his own like blog and website running on his own network. So I mean, we're still at like,
Yeah.
we're still at that phase
Yeah, it's
where
still
that's,
early days. And that's what's exciting to me. That to me is the most exciting part of all this, right? Like to have that opportunity to be back at the forefront of when this, the last wave of technology came to play. And there's a lot of people who really, I'm sure you've interviewed a bunch of them, who really kind of get very, revolutionary style, like guerrilla fighter style type mentalities. But it is, to a certain extent, just such early days, and it's so exciting, the potential of this technology. We're just at the tip of the iceberg. And to me, the most exciting part is just seeing, certainly not mainstream adoption just yet. Most people can't tell you what blockchain is, but seeing the institutional adoption, at the very least, institutional players start to dip their toe into the waters. We talked about custodianship. Just this morning, Northern Trust announced that they're going to start doing crypto custodianship, because they feel that the current crypto custodians are just overcharging people. They think they can do it better. They see a big opportunity. They're going to start stepping in. And so from
what I understand, those custody solutions are literally just like a bunch of like ledgers and nanos and wallets in a safe somewhere. It's not beyond that. Like it's literally just someone else owns the private keys. It's in someone else's wallet, and they literally put it in.
I mean,
in a bank.
I mean, we could spend a whole interview on that, but just briefly.
I'm sure.
I mean, the concept of taking a digital asset and moving it into a physical representation and then burying that deep underground, that to me seems so backwards of a solution.
I know.
It's the equivalent of trying to find out how many horses do you need to pull your car along, right? You're using this older mechanism on this newer technology. So, but there are some folks out there, some folks that we've partnered with that are working on a different type of custody model. And we're exploring something similar, something we like to call distributed custody, where instead of having, even with these current custodian solutions, there are very much single points of failures, right? I mean, even if you, do a multi-sig wallet approach, or you shard the keys or some other mechanism, you're still kind of trusting you're putting all your eggs in one singular basket, and certainly that that becomes a massive target. And so there are mechanisms to do sort of a distributed custody model, where you're effectively you move more towards a consensus model for how these things are custodied and when they can be released, and how to properly authorize that. But one of the big challenges there is the regulation. In that model where you have a distributed custody mechanism, and let's say there's a multitude of entities that are holding custody for you, what are the custody rules, around that? Historically, you cannot do that. Certainly there's always sort of been that single custodian that holds your assets or your funds. But with the technology, you can do sort of a distributed custody mechanism. What does that do for net capital requirements? What does that do for fiduciary responsibilities, et cetera? So it's still a big question mark. So, but one that will be figured out soon. I think within the next 6 to 12 months, we'll see a much more robust custodianship model come to light.
Yeah, and I think it's needed for the entire industry, for this industry to be successful, because right now it's still Wild West days. So, and I just wanted to mention too, so you've got, this is not your first rodeo. So you've done multiple startups before this. You've got a CS background. Can you dive a little bit into that?
Yeah, absolutely. So computer science background, I've certainly been dabbling in technology for, probably since 1998, I think. And I'm probably dating myself in the crypto world, because most people are a lot younger. But a lot of my prior businesses that I've worked on have been in the financial market space. So I built virtual financial exchanges, things like a Hollywood stock exchange type model for musical acts, built algorithmic trading platforms. I've done infrastructure security around financial markets and healthcare. So a lot of my prior experiences have been at that intersect of technology, business, and finance. And going back to your earlier question around the mechanism of smart contracts, it's right there. It's sort of an atomic representation of that same intersect, right, of finance, tech, and business, with a splash of legal in there as well. But this is something, again, that our team has been active in this space for some time. We like to call this token revolution, if you will, the ICO or STO revolution, as almost like a crowdfunding 2.0, which crowdfunding 1.0 was back, started in 2012 with the Jobs Act, and there were limiters in the technology. So it was an interesting scenario where somehow the compliance got, the regulatory framework got ahead of the technology framework, but now with this new distributed ledger technology, there's a lot more that's possible and that can be done. I think you're going to start to see, and again, we're still just at the tip of the iceberg, you're going to see a lot more unlocking of the potential in these capital markets that are more, crowd oriented, right? Where the crowd can determine who they want to invest in. And it's not just, there aren't kingmakers per se, right? There's that mechanism where the crowd can vote on the best projects and the best companies and where they want to put their money to work, and do so in a flexible and obviously, safe way. I guess I'll use the word safe instead of regulated.
Yeah. And it's automated too. I mean, that's the big thing is like I love your example of, kind of 1.0 versus 2.0 when it comes to crowdfunding, because 1.0 was a very manual time process. So 2.0 and smart contracts and the direction we're heading is a very automated, push this button, execute a smart contract kind of, automated system of, okay, now the broker gets paid. Now, everyone basically gets their cut. Everything's, set up and comes through the system. It's a trusted third party. Consensus happens. So now it's just a totally different way of approaching the problem. But in the end, it just simply automates all of that. So there's less paperwork. There's less, there's no faxing things to the IRS. It's an automated process to be able to get things done.
Yeah. I mean, in a couple of examples there, like, back in, crowdfunding 1.0 days, they had this concept of a revenue share crowdfunding, where let's say a local bakery, a small business revenue share crowdfunding, where let's say, for example, a local baker down the street from where you live in your neighborhood needs to buy a new oven. That oven costs, let's call it $100,000. So they do a crowdfunding campaign where they see if their customers can help them raise the capital to buy that oven. And in return, they'll give their customers 5% interest or 5% of the revenue that they generate over the next 12 months from that oven or something like that, right? And so there were some portals that started doing that several years ago. But the overhead costs on managing all of that, right? Who's sitting there tracking the financials? Who's sitting there auditing books? Who's sitting there doing IRS tax returns? Who's sitting there, ensuring that all the small investors get their revenue share proceeds from the deal? All of that overhead really sunk these deals and it made them not viable. And now, it's really not hard to imagine how you can do that with a smart contract. A lot of that can be, like you said, automated. That level of trustlessness where you don't have to, be concerned about that counterparty risk of unscrupulous players in the market, because a lot of that is just fully transparent and automated. I think there'll be a lot more of those types of deals coming forward. Another example I like to use that I think really resonates is, what if you had the opportunity to invest in a promising college student, effectively help them cover tuition, and in return you can structure it to receive X% of their income for the first 10 years of their career, right? And so it's something that could be a win-win where you're really helping to support this student's college tuition fees, and in return you can expect a relatively modest return on your investment, but there's that sort of that double bottom line returns there, right? Where you're helping out a college student in need and getting some investment capital in return. So that's another structure that again can be done via smart contracts very soon.
And it starts with platforms like what you've just released and just created. It starts with getting trading platforms together that are trusted, where you can go and buy and start participating in start dealing with these tokens and start dealing with these assets in a new way. That's where it starts. And then we get to layer on all that, all this other future stuff later, once we start solving the problems of how do we trade these? How do we, what platforms do we use to trade them? What platforms do we trust to trade them? How's custody management managed? All of those different things. Once all of those things are solved, as your platform is going to evolve and iterate and improve, then we get to do, these really cool smart contracts. Then we get to do, all this, crowdfunding 2.0 stuff that you're talking about. And it's starting to happen. So, essentially, that's what the platform that you're creating kind of is a mechanism to kind of help bring us there. Is that correct?
Yeah, it's infrastructure. It's infrastructure. And certainly that's what drives us to partner with a lot of the other players in the market, because we know that we're building out infrastructure that's critical to them as well. And so for us, helping our partners succeed in turn helps us succeed, because the more and more participants that are on the market, the more and more of these qualified offerings can go live and more participants can be there.
Awesome. Well, do you have any final thoughts before we wrap up?
No, certainly one of the big things that we always push in terms of what's needed to really grow the market and get it to that next step is the item of education. We touched on it a little bit earlier, that certainly right now you need to be very pretty technically skilled in order to start participating in these markets. And so, there is a need for more user-friendly dApps out there. But education is a big component as well, right? You want people to be able to trust this type of technology, to trust the people that are using this technology. And we're just now starting to see a lot more, great content come out and great, instructions and guides and manuals to come through. Certainly we have some content on our website at OpenFinance.io. But here again, we turn to our partners who are just putting out some great content, who can, push out material that can really benefit everyone. So, some of our outlets like HackerNoon, for example, have, tremendous content on them. And so, it's just about getting more education and awareness out there to the general masses.
Yep. No, that's why I do this podcast. It's about educating people, teaching them what's coming, what's happening, exposing them to all these CEOs and all these people working on all these cool projects like yours.
Yeah, absolutely. Yeah. I mean, it just has to continue in order, so that at your next family gathering, people don't look at you weird when you tell them you're working on blockchain technology.
Yeah, you're in crypto.
Yeah. They're like, oh, you're one of those people.
Yeah. Well, again, thank you for coming on the show. It's been awesome having you, and I wish you a lot of success.
Yeah, thank you so much. Appreciate you taking the time.
Take care.
Thanks.